It's that time again. Hey, my friends, welcome to another fantastic week in crypto. I guess maybe not so fantastic if you're someone who is bullish on prices. Today is February 24th, 2025, Monday, and we're off to a ripping week. And maybe not so positively anyway. So we're going to take a look at that. We're going to take a look at some of the most major news that's coming out today as it relates to OKX exchange and their plea. We're going to follow up on what's going on with Bybit, which was the largest crypto heist in history. What's been going on as far as their ETH recoveries for customers and much else. Remember to hit like if you enjoy these videos. Remember to subscribe if you're new to the show. About 12% of my viewers, 12 to 18% are not subscribed. So yeah, do us all a favor and subscribe. Do yourself a favor because we're going to go ahead and get into it almost every day during the week whenever we can, except I have to announce next week I will not be available. I will not be here. I won't be here in the United States. I'm going to be traveling to Prague. I had mentioned a while back that I was setting up a trip with my lady. So yeah, we'll be taking a week off, taking a much needed vacation from these markets. And it's going to prove to be a little bit more expensive unless the prices recover. But let's go ahead and take a look here. We have right now the market caps for all cryptos down, and ouch, down 8.2% at $3.079 trillion. Gas price is actually really nice, though we're seeing an insane amount of volatility for ETH because of the gas limit being raised, basically increasing block sizes. We are seeing that fees are still really low, right? Right now we have 6 GUI. We probably would have seen like 100 GUI if this had been pre-gas limit raises, as there's more demand on chain when we see this kind of volatility across all sorts of crypto products, such as decentralized finance, NFTs, etc. So yeah, really nice to see that at least. We have to look for the silver linings here, do we not? When am I going to Miami, Robert? I would like to go ASAP. I still have my cousin out there, and he's alone in Miami, and so many of my friends that I grew up with. I can't wait to go back to Miami. I got to find an opportunity. Thanks for reminding me, Robert. That'll be the next trip after Prague, maybe. Something I'll think about. Now, maybe during one of the Bitcoin conferences or something. Anyway, we have Bitcoin down 1.8% over the last hour. 4.6% over the last 24 hours as it tries to stage a recovery here, a bounce, and still down 5% on the last week. So erased pretty much all the gains over the last week. It's sitting at $91,927.23. Similarly, we have Ethereum down. It is down 10.9% over the last 24 hours and 9.3% over the last 7 days. It is at $2,508.12. This follows some news that came out over the weekend about Bybit accruing ETH that they had lost in that hack, and that caused ETH to be up over 5% yesterday. It was up really nicely and erased all those gains today and then some. And we have some other losers down here in the top 10, which will include Solana. Solana is now down 15.1% over the last 24 hours, 21.2% over the last 7 days. So a lot of people are calling this pretty much the end of meme coins, and that this is what is reducing so much demand for Solana. Other things that are impacting Solana here are a March unlock, where something like 30% of the tokens that are going to exist will be issued, and so that's definitely weighing on the price here, as well as the meme coin euphoria and frenzy somewhat dying down. I do feel like Trump Melania coin were the peaks for that particular frenzy. We had ICOs, NFTs, DeFi, and now we got meme coins. What will be the next one? Just when you think it's going to be something fundamentally great for humanity and technology, we can be surprised by this market. Anyway, and certainly I think that DeFi did a lot more in that regard. Probably one of the more useful ones outside of ICOs, which we currently can't do, but maybe will again in the future based off some of these comments, like from the CEO of World Liberty Financial, Trump's linked family DeFi project, talking about trying to study this ICO thing and get involved to creating the conversation around opening that up again here in the United States. So I think that would be fantastic to see. But still, we're seeing down also on Dogecoin, 13% over the last 24 hours. Cardano down 11.1%. And this is despite some positive news that's coming out for Cardano. Today, it turns out the SEC has accepted to review the Grayscale Cardano ETF. So it doesn't mean it's approved or anything, but they have acknowledged that filing. So I think that should have boosted Cardano, but it is actually down 11.1% today, even more than ETH. And we have, I guess, Tron down here. I'm not even going to talk about Lido staked Ether, kind of pointless. But yeah, we'll just skip to Tron. Tron is actually holding up really well. It's only down 2%. I guess when you're already down there or has suffered some of the losses that it has, you can't go much further. But it can, because it's still at the number 11 spot, which for Tron, it's actually really commendable. I don't see it as much a part of the conversation these days, but clearly a lot of holders of that particular token. So looking at the Bitcoin chart here, we're looking at the 4-hour chart. We can see that we're sitting right around this kind of crucial level here, this support level. So I think this is absolutely crucial. If we do break below, I would say $90,000, $89,000, like we saw recently, I guess, then we might see all the way down to maybe around here, around $70,000, maybe a little bit higher, maybe closer to $75,000 for Bitcoin. So always advising caution, be careful, don't invest more than you're willing to lose, all that stuff that we hear all the time. I think it's definitely important when we see these dips. We might be losing strength in Bitcoin. We are seeing lower highs on some of these recent gains. And at the same reverse, going back, we're actually seeing higher lows. So even if we did go back to $75,000, I don't think it would signal the absolute end for this bull market. I think it would definitely rebalance things, force people to accept new perspectives right on this market. Maybe it's not up only, and really confront and face what they're doing with their money in these projects, right? So yeah, as people are noticing also, the ratio is worse still. We're seeing Bitcoin dominance really doing really well relative to all these other alternative coins. And so I think the fear here is that if Bitcoin drops to $75,000, we're actually going to see negative Ethereum prices, just like we saw oil prices back in the day. And so you might be able to scoop up some really cheap ETH when we're at negative 1,000 USD per ETH. Yeah, a bit of a joke there, but you get my point. We see Bitcoin drop 50% and we'll see ETH drop another 60-70%. It's been pretty rough during this time period. Although people are talking about this article right now, or it was an older article from Ken Griffin, I believe his name is. He's the head of Citadel, and they have apparently been looking to start trading crypto and talking about how they might be market makers soon. There were some really positive comments from that Citadel fellow back when he made that article about 2 or 3 years ago, and he talked about how he could see ETH actually replacing Bitcoin. So maybe this means that they're going to get involved with ETH in a big way, although 2 years is a really long time in crypto. But yeah, they definitely missed out on trading opportunities by not being involved in cryptocurrency early on. So that's a lot of what we're hearing here. Anyway, yeah, trade cautiously, guys. Bitcoin's still the safest place to be if you're not sure, and you must be involved unless you trust the stable coin issuers and their holdings. And I guess that could similarly be somewhere good to be. But yeah, I think this is going to be an important stage here at $90,000. I don't think anything's broken just yet, just normal volatility for the most part. And yeah, we saw today the S&P 500 was down 0.5%. It tried to stage gains, and then it just pooped, right? And we also saw that with the NASDAQ. The NASDAQ was down 1.21% at the close, and which is the one at the Dow Jones Industrial Average. Actually, that one ended up 0.5% up on the day. But crypto mostly mirrors what we see in NASDAQ, a lot of these tech stocks. So seeing that dip 1.21%, I guess that should give us clues as to why crypto overall dropped. Although we dropped a little bit more. Maybe some of the reasons that we saw that these stock indexes were doing well and then reverse course has to do with this comment that I found on the Ethereum subreddit by RoboZar, who said Trump casually mentioning in passing in an unrelated news conference. And I didn't watch this particular conference, but I found this comment insightful. He said apparently in passing that tariffs are going ahead on schedule next week after traditional finance closed up their stock shop for the day. But have no fear, the crypto markets trade 24/7, 365. We get to see it happen in real time, baby. Tomorrow is going to be a bloodbath on the S&P. I sure hope not, because I feel like even though we are reflecting what might happen tomorrow already, in crypto, what might happen with regular stocks tomorrow, I feel like if stocks poop tomorrow, we're just going to poop hard again. So I really kind of don't hope that happens, but we will see. There was an issue today that I'm seeing is circulating, people are becoming aware of right now, and it has to do with the Holsky testnet for Ethereum. As we know, there is a big update coming up soon, the Petra update for Ethereum, that's going to change a lot of things for the better when it comes to users, when it comes users on layer 2, interfacing for developers, so much else. And going into this testnet, when it was activated, it seems that a bunch of validators were mining, let's call it mining, the wrong fork. And they continue to do so, hoping that they were on the majority fork, and it wasn't the case. And it looks like they might be slashed of their Ethereum testnet token. So this looks like it's going to force the upgrade, the Petra upgrade for the Ethereum mainnet to be delayed just a bit. So check out these comments on the Ethereum subreddit. Halululo wrote, looks like enough Holsky validators followed the invalid chain after the fork for it to justify, meaning 2/3 of all validators can't return to the correct chain without getting slashed and losing some of those deposits that are staked. ETH2353 wrote, they can also wait for their balance to leak out without getting literally slashed, though the amount of balance leak would be significant. About 24 ETH per validator if my napkin math is correct. So if you're looking at 32 ETH per validator that are staked and you lose 24 of those, that is an unfathomable amount to lose. And these are some of the risks, right? So this is just happening on the test net. But imagine this happened on the main net, right? How catastrophic that would be. Imagine going onto your Coinbase account and you have your staked ETH through there and whoop, you've just been slashed a huge amount. And you can see the concern around this particular issue. Timmer WB wrote, that's shame, but that's what testing is for. Hopefully devs can pin down the issues. When's the next all call developers meeting? Halululu responded, as far as I know, it's a simple config issue. They all use the mainnet address for the beacon chain deposit contract. So they used the wrong address, even though this was supposed to be for the testnet blockchain. Anyway, yeah, I'm glad this happened on the testnet, and that this will obviously be reviewed by developers and fixed before this could possibly happen to any real funds, so to speak. Although we hear more and more about how difficult it is to even accrue testnet ETH. I don't know if that's changed, but people are straight up charging developers for test ETH to build out applications because it itself is becoming rare. Obviously not the same prices we're seeing for ETH, but it can also be harrowing to lose your test ETH. And so a shame, I think that's real value that's being lost and time here for some of these folks on the test nets. But glad they're doing the work on there before we all suffer. Hey gang, still breathing, barely jackknife. What's up? What's up, internet user, bro? And Aussie, fundamentals for long term, but randomized sentiment for the short term. Absolutely. Yeah, yesterday it was all bullish for ETH with Bybit accruing more ETH, having to buy ETH, that boosting prices. And then today it's just fear, trepidation. What am I here for? F this. Yeah, absolutely. You have to be able to stomach these things. And down indeed, Mr. Orange, at least for the day. Yeah, it's just one of those days, right, where everything is red. Look at these dang green. Get that out of here. That's a stable coin. Doesn't count. I don't know what USDS is. I probably should. It's top 18. Looks like another stable coin. But get that out of here. We don't want this green. We're going to only paint in red. Let's paint in red. Am I right, guys? Am I right? So OKX, this is on the New York Times, but you're going to find it pretty much on any publication that you find out there. OKX, one of the biggest crypto exchanges based out of the Seychelles, they have pled guilty to operating one felony count here in the United States. They first received a subpoena from the CFTC back in 2024. I believe that was February, so about 1 year ago. And now they have finally agreed to settle. And because they are complying with the courts, they have been given a 25% discount. So now they only have to pay $505 million instead of, I guess, $750 million or whatever it is, 25% more or whatever that would be. So they paid $500 million for apparently helping to process over $1 trillion in suspicious activity through their platform, including allowing customers in the United States to exchange with the exchange. And it was filed in the District Court of Manhattan. Apparently, folks could still go on there and engage. It looks like OKX even sponsored various events like the Tribeca Film Festival in New York City. So if you're basically sponsoring here in the United States, you're basically giving a green flag to U.S. citizens to engage with your platform, and they should not have been allowed to without the proper licenses. They pled guilty. They will pay $500 million. I think they'll be able to bounce back from this. They made so much money, hundreds of millions of dollars in fees, although they are giving that up. I guess just in case, you would want to be careful and pull funds if you do have on OKX while the dust settles. But something about the way that this is leads me to believe that they're going to be just fine here, and they're probably going to operate cleaner, I guess, within whatever the law is. And they announced that no customers were affected specifically because of this. In fact, they might have benefited by being able to operate on this exchange and get whatever they wanted to do. I think this is another case of just overregulation, stifling the industry overall. We'll see what response we hear from OKX going forward here, but yeah. They flagrantly violated the requirement for years to register as a money transmitting business, and so will pay $504 million in fines and penalties. They did announce in January, I believe, that people in the United States cannot, they posted on their website, cannot engage with the platform anymore. They're being more stringent with KYC, and this is why they're being given that lenient discount on what would have been a harsher penalty out here. Anyway, in other bad news, South Dakota lawmakers effectively kill proposed Bitcoin bill. So we've just heard day after day of all these different states creating bills and at different stages within pushing that bill to actually being enacted to allow them to invest state funds into Bitcoin treasuries via different allocations, via different methods, all different kinds of structuring here. But the South Dakota one has been killed at a meeting of the state's House Commerce and Energy Committee. So this took place today, and they have voted, these lawmakers, to defer this bill, HB 1202, to the 41st day of South Dakota's legislative session. So because they have deferred it, moved it on to the 41st day, it is effectively killed because legislature has no more than 40 days in session. That's the same thing. Like if you give somebody 2 life sentences or natural life sentences, like they're not going to live beyond the first one, very likely anyway. Though we hear from Elon Musk, I believe yesterday he tweeted that we are on the event horizon of the singularity. Yeah, I'm going way beyond here. But anyway, my point, so we might live forever beyond one lifetime is my point with that. If we really are on the event horizon of the singularity, and the singularity is fruitful when it comes to longevity for humanity. But that's the tangent. Gonna go back to the story here. Anyway, they've effectively killed this bill, done for the South Dakota Bitcoin bill, since it has been deferred to more days than is allowed for these sessions for these bills to actually pass. So the end of that, it looks like, according to this CoinDesk article, and this is kind of news to me, some other state governments have failed to pass their legislation as well, including North Dakota, Montana, and Wyoming. However, we still have other states like Florida, Arizona, Utah, Ohio, Missouri, and Kentucky that have introduced legislation that is still moving through government. So still hope on that front. But yeah, we should expect that we have a lot of older conservative folks who are just beginning to look at this thing. We see prices not doing as hot as they have been recently. We do expect that some of these are going to fail. I fully believe that. So I do expect to see more of this kind of news of certain states succeeding with their treasury, Bitcoin treasuries or digital asset treasuries, and others that do not get that far and will unfortunately probably be left behind, I think, over the longer term. So heads up on that one. Ozzy, is this Max Payne, Ozzy? Jackknife wants to know. I don't think so. I don't think so at all. But yeah, I've definitely felt a lot more pain here. But it should, again, force us to refocus our perspectives here and how we're invested in our diversification or lack of it in just Bitcoin and so on. Bybit, so this is the story that was taking place over the weekend. Bybit had been closing the gap on the loss of $1.4 billion in ETH that were hacked out of the platform after supposedly it was the Lazarus North Korean hacking group that perpetuated the greatest heist, or at least crypto heist, in history. So they've been apparently getting ETH via many different ways. According to on-chain tracking service Look On-Chain, they said on X, Look On-Chain, that the exchange has received 446,870 ETH worth $1.23 billion at current prices through loans, large deposits, and Ether purchases in the past 2 days. So this would be probably the reason for seeing some of these gains that we saw in ETH over the weekend. So according to Bybit, all deposit and withdrawal activity has fully recovered to normal levels, with total deposits slightly exceeding withdrawals on Saturday as a sign of market confidence. So more ETH coming in than leaving, or I guess just crypto deposits overall. People beginning to regain confidence in the exchange in particular. So yeah, I think it's not going to be the end for Bybit here. They're figuring it out, and luckily no users seem like they're going to be losing any sort of money here. And I think it was pretty well handled. Bybit was on top of it, and they have funded almost immediately all this ETH back. So certainly I would have that confidence as well with the platform. Arthur Hayes had been advocating, actually you saw this coming from a lot of the Bitcoin maximalists playing out over the weekend, and Arthur Hayes kind of added fuel to the fire, the ex-CEO of BitMEX, the largest leverage trading exchange for some time for Bitcoin and other cryptocurrencies. So he wrote to Vitalik Buterin, tagging him on Twitter, "Will you advocate to roll back the chain to help Bybit official? My own view as a mega ETH backholder is ETH stopped being money in 2016 after the DAO hack hard fork. If the community wanted to do it again, I would support it because we already voted no on immutability in 2016. Why not do it again? No one has a problem with DeFi on CZ's computer, Binance chain, really. Why not make ETH the Vitalik Buterin computer?" So it's obviously some sort of joke here, like some sort of backhanded comment here, where he's basically saying, why not just accept your role as the head of Ethereum? Let's just call Ethereum Vitalik computer rather than world computer, just like we do for Binance chain. It's CZ's chain. Ethereum is Vitalik's chain. Even though he's a bag holder, he's taking this opportunity to kind of poop all over Ethereum, saying, why don't we roll it back like we did back in 2016 during the DAO, which is not exactly what happened. There's an article on CoinDesk that somewhat succinctly describes what went on with this supposed rollback, which wasn't really a rollback, as it says here. The term rollback was never used during that revision. It was referred to as an irregular state transition. The move still triggered huge and important debates over so-called immutability in blockchains. So the DAO was like almost the original ICO of ICOs. Folks were able to put in ETH, get spit out these DAO tokens that they could use to vote on various projects and whether they would get a share of the huge treasury of ETH and money that was held by the DAO during these deposits. Anyway, the hacker basically got in there, stole a bunch of ETH, and there was a way because of the way Ethereum works with states and balances, it's very much like a bank account, it describes here in this article. And it was formulated in a way that you couldn't really roll back the chain. You did have to have validators, nodes, vote on what would be the correct chain. Validators voted to find a way for folks to get their money ETH out of the DAO at the time. So because of what's going on with Bybit, you're going to hear these calls from maximalists. Why not just roll back the chain again? It's very different now. The world is very different. We have so many bridges, layer 2s, smart contract integrations, different token types that exist, that trying to do something similarly like this just probably would not be successful, if at all even possible. And I highly doubt you would get the support to create some sort of rollback for an exchange like Bybit. But that is creating a lot of controversy, and I think it's actually a good conversation about immutability. And I was personally against the rollback. I understood why it needed to happen. As someone who had funds in the DAO, I was happy to get that back. But at the same time, I think Ethereum took a huge hit to credibility, and the price suffered for it. So though I got some money back in dollar terms, it was a lot less than before it went into the DAO. And I wonder if it had not rolled back, I would have lost that ETH, but I only put in what I had been willing to lose at the time, which might have been a lot. I actually don't remember exactly what it was. Anyway, I got it back, but it was not worth that much, and it took a while before Ethereum climbed again, right? Anyway, what a wild time. And mutability important, not rolling back the chain, accepting what is agreed upon. And I think that's for the most part what it continues to happen. It was agreed upon that consensus of the balances of ledgers would become this after this supposed rollback or state transition, regular state transition scenario. But cool. I think it educates people on what we're here about. So I get it in a way. And Arthur Hayes went a little further into, I guess, doom territory here when he wrote this. Also, I noticed Bitcoin Goblin Town incoming, down to Goblin Town. Lots of IBIT holders, so BlackRock ETF holders, are hedge funds that went long ETF short CME future to earn a yield greater than where they fund short-term U.S. treasuries. If that basis drops as Bitcoin falls, then these funds will sell IBIT and buy back CME futures. These funds are in profit, and given basis is close to UST yields, they will unwind during U.S. hours and realize their profit. $70,000, I see you, mofo. So he's basically pointing at this particular aspect of the market of these hedge funds trying to hedge themselves and them unwinding certain Bitcoin ETF positions, sending us down to Goblin Town, that being what takes us down. I actually think it's usually not what we expect that takes us down to Goblin Town, right? So anyway, someone else who does believe we are going to be seeing $70,000, and it's likely, it's possible, I suppose. And so I try to share with you guys as many perspectives as possible so you make the right decisions, as always, for yourself. So some caution definitely advised. And on the other side of the coin, of the Bitcoin, Raul Powell wrote, "You guys all need to learn patience." This was 2017, and he's sharing this chart right here. This was 2017. Very similar macro structure. 5 different pullbacks of over 28% or 28% plus in Bitcoin. Most of these pullbacks lasted 2 to 3 months before a new high. All saw 65% corrections. All were noise. All this was noise. Go do something else more constructive than stare at the screen. And somebody who wanted to do something constructive, I guess, on the screen is Rand Neuner, who then comments underneath, "What is the correct contract address for patience?" I'm actually wondering myself what that would be. Anyway, I'm waiting for my hat to come in. Bitcoin, the Martini guy, he actually got his hat already, and it looks really, really good. Let's go get ourselves some McDonald's merch, right? Start my new job tomorrow. Wish me luck, he wrote. Yeah, and if you guys don't know who Raul Powell was, he was the founder of Real Vision. I used to watch their content a lot for different insights from financial gurus, so to speak. Really, I looked for more of the stuff outside of crypto. I don't think he was really as informed with crypto until after 2017. He really started paying more attention, though he'll claim he was buying it early on. I don't think he really cared about it very much, having followed him for years. He was an ex-Goldman Sachs guy. And yeah, he made a name for himself in crypto more so. And so that's Raul Pal, if you don't know. And Rand Neuner, he had hosted a very popular crypto show, probably the most popular TV show for crypto, CNBC South Africa crypto. And he kind of blew up there. And he's someone I frequently encountered and have interviewed even on my old show myself, right? I interviewed the person who usually does the interviewing. It's always fun when that happens. Anyway, here's our quote of the day. And I think it's kind of prescient to talking about patience or patience coin. I guess somebody make meme coin patience. So let's do fun stuff. Julius Caesar, who said, "It is easier to find men who will volunteer to die than to find those who are willing to endure pain with patience." Yeah. It's like a war quote. We're definitely at war with traditional finance. So yeah, they can be our friends until like the truth hits them about the Trojan horse that is not going away, guys. Crypto is here to stay. Take care, guys. Much love. Thank you for joining me, by the way. Thank you so much, B, Jack Knight, for making it out here and partaking in the chat and making it lively. I really appreciate that. Mr. Orange, Ozzy, of course, Robert, nice to see you out here. And I want to give always a shout out to my Patreon sponsors, YouTube sponsors, those who were with me through my own harrowing time when I had to step away from making videos. A shout out to Michael, who used to do my thumbnails and helped me during that time as well. I wonder if you're still out there. Take care, guys. Much love and stay cryptic. Peace.